What is up guys, welcome back to the channel. We recently had a lot of interest in renewable energy stocks, specifically solar, but what about the electric utility stocks that will also benefit from the shift towards renewable energy? Let's take NextEra Energy as an example. No other utility in the country is currently generating more capacity from solar or wind power. Investing so heavily in green energy projects has helped the company to stay ahead of whatever clean energy legislation might be working its way through Washington, and it's boosted the company's compound annual growth rate to the high single digits for more than a decade. They have set aside over $50 billion for infrastructure projects, which are mostly renewable energy, between 2020 and 2022, and also has ambitious plans to install 30 million solar panels in Florida by 2030. So with that in mind, for a comparison today I have picked 3 electric utility companies. These are NextEra Energy, ticker symbol NEE, Duke Energy, DUK, and Southern Company, ticker SO. In order to make the comparison possible, we will be looking into 8 different factors: analysts' price targets, forward price-to-earnings ratio, annual revenue growth, price-to-sales ratio, return on equity, last 4 quarterly earnings results, current ratio, and dividend yield. The best company under each factor will get a point, so it is possible to have from 0 to 8 points, and in the end the stock with the most points will be considered the winner of this comparison. I hope that the rules were clear, so let's begin. First factor are the analysts' price targets. As investors, we want to check how far the current share price is away from the average target of analysts. If the current price is under the average, we will consider the stock as undervalued, and in the end, the company with share prices furthest away from the average target to the lower side gets a point for this factor. For NextEra, we have 18 price targets of analysts. They range from the lows of 66 to the highs of $101 per share. The average is at $87.50, and the current share price is at $75.77. So there is around 15.5% room for the current price to reach the average target of analysts. For Duke Energy, we have 16 price targets of analysts. They range from the lows of 94 to the highs of $112 per share. The average is at $100.66, and the current share price is at $96.28. So there is around 4.5% room for the current price to reach the average target of analysts. For the Southern Company, we have 17 price targets of analysts. They range from the lows of 54 to the highs of $76 per share. The average is at $64.34, and the current share price is at $62.33. So there is around 3.2% room for the current price to reach the average target of analysts. Results for the analysts' price targets factor are in the table, and with the highest percentage, NextEra Energy gets the first point. Second factor is the forward price-to-earnings ratio. It is calculated by taking the current share price and dividing it by the estimated future earnings per share. This is the standard price-to-earnings calculation, with the difference that earnings here are predicted by analysts. So in the end, the stock with the lowest forward price-to-earnings ratio gets a point for this factor. For NextEra, the forward price-to-earnings is at 27.86. Forward price-to-earnings for Duke Energy is at 17.67. And the Southern Company has a forward price-to-earnings of 17.56. Forward price-to-earnings ratios are in the table, and with the lowest value, Southern Company gets the first point. Third factor is the annual revenue growth. As investors, we want to check if the revenues of a company are on a steady increase. We will take a look into the revenues of the 4 most recent years and compare them one by one. If revenue was on the increase from one year to the next, it will be considered as a +1, and if it was on the decrease, it will be a +0. Then we sum the results up to a minimum of 0 and a maximum of 3, and in the end, the stock with the highest sum gets a point for this factor. Annual revenues for NextEra Energy, and going into 2018 there was a decrease to $16.7 billion. Then into 2019 there was an increase to $19.2 billion, and going into 2020 there was a decrease to $18 billion. So with 1 increase and 2 decreases in annual revenues, we have a sum of 1. Revenues for Duke, and going into 2018 there was an increase to $24.1 billion. Then into 2019 there was another increase to $24.6 billion, and going into 2020 we had a decrease to $23.4 billion. So with 2 increases and 1 decrease in annual revenues, we have a sum of 2. Revenues for the Southern Company, and going into 2018 there was an increase to $23.5 billion. Then into 2019 we had a decrease to $21.4 billion, and going into 2020 we had another decrease to $20.3 billion. So with one increase and two decreases in annual revenues, we have a sum of 1. Results for the annual revenue growth factor are in the table, and with a sum of 2, Duke Energy gets the first point. Fourth factor is the price to sales ratio. It is calculated by taking the market cap and dividing it by the trailing 12 months worth of sales. The formula suggests to be looking for a company with a low market cap and with a high result in sales. So in the end, a stock with the lowest price to sales ratio gets a point for this factor. For NextEra Energy, the price to sales is at 8.26. Price to sales for Duke Energy is at 3.16, and the Southern company has a price to sales of 3.23. Price to sales ratios are in the table, and with the lowest value, Duke Energy gets another point. Fifth factor is return on equity. It is calculated by taking the net income and dividing it by the shareholders' equity. A higher ROE shows that the company is well managed and that money from investors are efficiently handled. So in the end, a stock with the highest return on equity percentage gets a point for this factor. For NextEra, the return on equity is at 5.46%. Return on equity for Duke is at 2.21%, and the Southern has a return on equity of 9.56%. Return on equity percentages are in the table, and with the highest value, Southern company gets another point. Sixth factor is the last 4 quarterly earnings results. When a company reports earnings, they are compared to expectations of analysts. So earnings can either beat expectations, meet them, or miss them. We will consider that beating expectations is a +1, meeting +0.5, and missing 0. Then we sum the results up to a minimum of 0 and a maximum of 4, and in the end, the stock with the highest sum gets a point for this factor. We have quarterly earnings for NextEra, and Q1 of 2020 beat expectations, Q2 beat, Q3 beat expectations, and Q4 beat. So with 4 beats in quarterly earnings, we have a sum of 4. Earnings for Duke, and Q1 of 2020 missed expectations, Q2 beat, Q3 beat expectations, and Q4 met. So with 2 beats, 1 meet, and 1 miss in earnings, we have a sum of 2.5. Quarterly earnings for Southern company, and Q1 of 2020 beat expectations, Q2 beat, Q3 beat expectations, and Q4 beat. So with 4 beats in earnings, we have a sum of 4. Results for the last 4 quarterly earnings factor are in the table, and with sums of 4, both NextEra and the Southern each gets a point. Seventh factor is the current ratio. It is calculated by taking the current assets and dividing them by the current liabilities. As investors, we want to check if the company is able to cover its debts with assets, but also if they are actually being leveraged. So in the end, the stock with the highest current ratio between 1.5 and 3 gets a point for this factor. For NextEra, the current ratio is at 0.47. Current ratio for Duke Energy is at 0.53, and the Southern company has a current ratio of 0.71. Current ratios are in the table, and since there is no result between 1.5 and 3, no company gets a point for this factor. Last factor we are taking into account is the dividend yield. It is calculated by taking the annual dividend per share and dividing it by the share price. A high dividend yield may suggest that profits is shared with shareholders, and that is a great passive income source that we as investors are looking for. So in the end, a stock with the highest dividend yield gets a point for this factor. NextEra Energy is paying an annual dividend of $1.54 per share, which is a dividend yield of 2.03%. For Duke Energy, the annual dividend is at $3.86 per share, which is a dividend yield of 4.01%, and the Southern company pays an annual dividend of $2.56 per share, and that is a yield of 4.11%. Dividend yields are in the table, and with the highest percentage, the Southern company gets another point. We can calculate the results, so NextEra Energy has 2 points, Duke Energy 2, and the Southern company 4. This means that with a sum of 4, the Southern company is considered the winner of this comparison. And that was it. If you got value or new ideas, then make sure to push that thumbs up, it helps the channel a lot. Now there is a question for you, which energy stocks have you been buying recently? Share your picks in a comment below. If you are interested to know exactly when I buy or sell in a stock, then consider the options on Patreon. Last week I did stock comparisons on several oil tanker companies, and we have 32 weeks worth of investing with the Revolut stock portfolio. If you are interested in any of those, then click on a video currently on the screen. And that was it from my side, thank you for watching, and I will be seeing you all in the next one.